And we turn now to the economy and the Fed facing a very tough decision today on whether to raise interest rates yet again in an effort to slow down inflation. It is a consequential call, a difficult call, made all the more difficult by the recent failure of multiple banks. Ed O'Keefe following it all for us. Ed, good morning.
Tony, good to see you. Whatever the Fed announces today comes amid turmoil in the banking sector following the failure of multiple banks this month. And experts say the Federal Reserve is going to need to walk a fine line to get it right.
The U.S. banking system remains sound.
Treasury Secretary Janet Yellen once again pledging support to smaller banks following the collapse of Silicon Valley Bank and Signature Bank.
Our intervention was necessary to protect the broader U.S. banking system, and similar actions could be warranted if smaller institutions suffered deposit runs that pose the risk of contagion.
That risk hangs over the Federal Reserve, which is expected to raise interest rates to try to cool the economy and combat inflation. But with fresh instability in the banking sector, financial markets are now expecting, maybe hoping, for a more modest quarter percentage point increase.
If I were on the Fed, I'd recommend no rate increase.
Mark Zandi, chief economist at Moody's Analytics, says the Fed has a tough job after the bank failures this month.
We're trying to thread the needle here, balance things, trying to do enough to help support the banking system and financial system, get that on solid ground, but at the same time continue to fight inflation.
The housing industry could be particularly affected by today's decision. Allison Goodhart DeShuttle runs a real estate company with her mom, Sue, in Northern Virginia, and has seen things cool in the past year. As rates climbed, she says buyers began getting priced out, and sellers decided to stay put.
Year over year, our market in the D.C. area is down about 20% in terms of closed sales.
Nationwide, existing home sales actually increased from January to February, but are still down more than 22% from last year.
It appears that interest rates are going to continue to rise. And if that's the case, then it's better to get the foot in the door now.
Now, here at the White House, President Biden knows the health of the economy could have big implications for his political fortunes. That's why everyone here, like the rest of us, will be watching this afternoon to see what the Fed decides to do and what Chairman Jerome Powell says about where he thinks things are headed. Vlad?
To be continued. Ed, thank you very much.